Welcome to another FAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video we're going to be going over FAR Area 1, D, and this is a remembering and understanding topic. Recall the purpose of Forms 10Q, 10K, and 8K that a U.S. registrant is required to file with the U.S. Securities and Exchange Commission under the Securities Exchange Act of 1934. And we're going to be doing that the SuperfastCPA way, which is diving straight into questions to learn the material. If you don't know much about our strategies and you want to learn more, make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training. We teach the key ingredients to passing the CPA exam, such as studying in the morning instead of studying after work so that your brain is fresh, doing mini sessions throughout the day on your phone, and especially doing the questions as your main learning material, because what are you going to be doing on test day? Multiple choice questions and sims. You're not going to be watching a lecture, you're not going to be reading a textbook, so why not practice what you're going to be doing on test day? And that's what we're going to be doing today. Now, just before we jump into the questions, I just want to let you know we will only be going over 5 questions in today's video, whereas Superfast CPA members will have access to the full 10-question video when we post it in the members forum. So if you like what we do today, you can get more of it by becoming a Superfast CPA member. With all that said, let's dive straight into the questions. All right, here we are at question 1. Let's just dive straight in. Which of the following best describes the purpose and function of the 8K form? Okay, so if you don't know anything about the 10K, the 10Q, or the 8K, you might have no idea which one of these is describing an 8K. Let's read through them, and then, again, if you don't know, then we'll go to the answer. If you do know, then you'll notice it as soon as we read it. A form used by public companies to report their quarterly financial performance, including unaudited financial statements. B, a form used by public companies to provide annual financial information, including audited financial statements and detailed business analysis. C, a form used by public companies to announce significant events or changes that may be of interest to shareholders or the SEC, such as mergers, acquisitions, or executive changes. And last, D, a form required for public companies to disclose ownership by major shareholders or changes in their ownership percentage. Okay, so again, if you know what the 8K is, you have already picked out what the correct answer is. If you don't know what the 8K is, that's okay. We're going to go straight to the answer, and we're going to learn what each of these forms is to start the video. All right, here we are. The answer is C, a form used by public companies to announce significant events or changes that may be of interest to shareholders or the SEC, such as mergers, acquisitions, or executive changes. Okay, so sounds like the 8K is all about significant events and changes that happen throughout the year. So let's read through these different options. Again, knowing what these forms are is going to give us a basis for the rest of the video so that we can continue learning in the next questions. So first, Form 8K, we kind of already learned about it. This is a report used by public companies to notify shareholders or the SEC about significant events such as mergers, acquisitions, executive changes, or other material events that could affect the company's financial health or shareholder decisions. So basically they're disclosing, hey, these big things happened this year that are going to affect the company, and they need to let people know. Now for the Form 10Q, which is another one that we need to talk about today. This is a quarterly report submitted by public companies to disclose financial performance for the quarter. It includes unaudited financial statements and provides updates on a company's performance between annual reports. And let's dive straight into the next one just to kind of talk about the 10Q and the 10K together. 10K, this is an annual report that provides a comprehensive overview of a company's financial health, including audited financial statements, a detailed business analysis, risks, and future outlook. It is generally more detailed than the 10Q. So the 10K and the 10Q are similar, but they're not quite the same. The 10Q is the quarterly report, so every 3 months the company is issuing a 10Q, and then at the end of the year they have to issue a 10K, which is the annual report. So they go kind of hand in hand, although the 10Q is typically unaudited because it's just something that's happening throughout the year, and then the 10K is audited because it's the official big financial report that people need to look at. So easiest way to remember, 10Q is for quarterly, and then the 10K is for annual. But if you remember that Q is for quarterly, then you won't get confused by the K, because you know, oh, that's not a Q, that means it's probably not the quarterly one, so that means it would be the annual one. And then the 8K, easy to remember because it doesn't start with a 10, it starts with an 8, so it's kind of unique in that way, and that goes over the significant changes that happen throughout the year. Okay, now that we know the purpose of these different statements, let's talk a little bit about the different requirements for how these are supposed to be filed. So let's go to the next question. All right, here we are at question 2, and one thing I want to say about this question is a bit more of a base for the next couple questions. The information here is something that is good to know, and you may be tested on it, but it's a little bit less important than the information that we're going to learn in question 3 and 4, but we need to know this information so that we can answer question 3 and 4. So let's talk about this here. Which of the following best describes some of the characteristics of an accelerated filer? Okay, if you have no idea what an accelerated filer is or what that even means, that's okay. We'll briefly read through these different options and then we'll go straight to the answer. Is it a public company with a public float of $700 million? Or is it a public company with a public float between $75 million and $700 million? Or is it a public company with a public float of less than $75 million? Or is it just somebody who doesn't even have public float? Again, if you don't know what public float means, what an accelerated filer is, that's okay. We're going to dive straight into the answer. Again, this is giving us a basis to be able to answer the other questions in this video. All right, here we are at the answer. The answer is B, a public company with a public float between $75 million and $700 million and is subject to the reporting requirements of the Securities Exchange Act would be an accelerated filer, or at least that's some of the requirements there. Let's talk about each of the different things that are in this question. Again, this is all giving us a basis for the next questions. First off, public float, if you don't even know what that is, that's okay. This refers to the total value of a company's shares that are publicly owned and available for trading on the open market. And that doesn't include shares held by insiders, company officers, or large shareholders owning 10% or more. Again, it's everything that's in the public open market. This definition isn't something you'll really be tested on necessarily, but it is good to understand that there is a difference between public float and revenue. Next is the Securities Exchange Act of 1934. Again, you're not going to really need to know what the nitty-gritty details are of this act. All you need to know is that this act happened and it established regulations for security trading. It established periodic reporting periods and things like that. It's basically what led to the requirements that we're about to talk about. So let's go here. Large accelerated filer. A large accelerated filer is a public company with a public float, and remember, public float is the total value of the company shares that are publicly available, of $700 million or more. These companies must also meet other criteria, including compliance with the reporting requirements of the Securities Exchange Act for at least 12 months. Basically, main thing you need to remember there is they have to have a public float of $700 million or more. Then there's accelerated filers. An accelerated filer is a public company with a public float between $75 million and $700 million, so they're smaller than large accelerated, but they're still an accelerated filer. These accelerated filers are subject to the same requirements basically, or at least very similar requirements. And then non-accelerated filers, these are basically any public company with a public float that's less than $75 million and or companies that are exempt from some disclosure requirements. So if they don't have a big enough public float to be considered an accelerated or a large accelerated company or filer, then they're just a non-accelerated filer, or basically all other filers as public companies go. Now, one important note I want to point out here: to be considered a large accelerated or accelerated filer, the company must make $100 million or more in annual revenue. If this requirement isn't met alongside the public float requirement, the company will not be considered as any type of accelerated filer. So I just want to say that one more time. If a company makes less than $100 million in annual revenue, then they cannot be considered a large accelerated or an accelerated filer, even regardless of their public float. Now, most situations, you're not going to see something like that, because if they have a really big public float, but they somehow have less than $100 million in annual revenue, something probably went really wrong. But other than that, that's probably not something you'll see very frequently. But just know that that does exclude a company from filing as a large accelerated or accelerated. Again, this question is kind of a baseline for the next questions. It's a little bit less important to know these numbers like 700 million, 75 million to 700 million, or less than 75 million for the large accelerated, and non-accelerated filers. But the reason I went over this is because you kind of need to have a little bit of a background about what these filers even are. Like, what does it mean to be a large accelerated filer or an accelerated filer? Now that we know what those are, we're going to talk about the more important thing in the next couple questions, which is the reporting requirement deadlines for these different filers. So let's go to the next question. All right, here we are at question 3. Before we dive into the full question, by what date must the company file its Form 10Q for this quarter? Okay, so we need to know when they need to file this 10Q. A public company with a public float of $914 million and over $1 billion in annual revenue has a quarter that ended on June 30th. Okay, so remember, we just talked about the different money requirements, and they're not too difficult to remember. Based off what we see here, you probably already know what kind of a filer this is. So based on what kind of a filer you think it is, when are they going to have to report this? If you don't know, that's okay. We're going to dive straight into the answer. But if you've seen this before, try to remember what the requirements are, and then when you're ready, come back, we'll look at it together. All right, here we are at the answer. The answer is C, August 9th. So let's read through this. Since the company has a public float of over $700 million and extremely high annual revenue, it is classified as a large accelerated filer. Okay, so again, that's a little bit less important than what we're about to talk about. According to SEC rules, large accelerated filers are required to file their Form 10Q within 40 days after the end of the fiscal quarter. Given that the quarter ended on June 30th, the deadline for filing would be August 9th, exactly 40 days after the quarter's end. Okay, so right here, this is what we need to focus on. Large accelerated filers must file Form 10Q within 40 days of the quarter's end. Accelerated filers must file Form 10Q within 40 days as well, and non-accelerated filers have a longer deadline of 45 days to file Form 10Q. So in this case, it would have been August 14th for them. But this is a very important thing that you need to know for the 10Q. But we had to understand what these filers even were or what that meant, which is why we had question 2. But now that we know how to figure out if it's a large accelerated filer or an accelerated filer or a non-accelerated filer, now we're talking about the reporting requirements for these. And turns out any accelerated filer has to file a 10Q within 40 days. And then if they're not an accelerated filer, they have to file it within 45 days after the end of the quarter. So that's something pretty easy to remember. I remember when I was going through the exams, I just remembered that if it was a 10Q, I just remembered the numbers 40, 40, 45. Maybe that's a little silly, but that was the easiest way to remember it. So again, when it comes to 10Qs and their filing dates, just remember 40, 40, 45, because large accelerated filer, 40 days, accelerated filer, 40 days, non-accelerated filer, or just any filer that's not an accelerated one, 45 days. Let's go to the next question. All right, here we are at question 4. Similar question, but by what date must the company file its Form 10K for the fiscal year? So now instead of talking about a 10Q, we're talking about a 10K. A public company with a public float of $500 million and $634,500,000 in annual revenue has a fiscal year that ended on December 31st. This should be pretty obvious what kind of an entity or filer this is if you paid attention in question 2. But now we're talking about when they have to file their Form 10K. If you don't know this, totally okay, as always. But if you have seen this before, try to remember and count out the days, and when you're ready, come back, we'll look at it together. All right, here we are at the answer. The answer is C, March 16th. So let's walk through this. Based on the public float of $500 million and the high annual revenue, again, that's a little bit less important, but it was just kind of a hint as to what kind of a company this is. The company is classified as an accelerated filer. So now that we know it's an accelerated filer, this is the important stuff we need to know. According to SEC rules, accelerated filers are required to file their Form 10K within 75 days after the end of the fiscal year. Since the fiscal year ended on December 31st, the filing deadline is March 16th, which is 75 days later. So something you might have to do is count out the days and know how many days are in each month to be able to figure out these kinds of things if you see them. Now again, this is the important stuff. Large accelerated filers must file Form 10K within 60 days. Accelerated filers must file Form 10K within 75 days, and non-accelerated filers have 90 days to file it. So for a large accelerated filer, in this case, it would have been March 1st, or if it was a non-accelerated filer, it would have been March 31st. And you'll notice it's just a difference of 15 days each time, 60, 75, 90. So this is another thing that I did when I was taking the exam. With a 10K, I just remembered 60, 75, 90, because large accelerated filers have 60 days, accelerated filers have 75 days, and non-accelerated filers have 90 days to file the Form 10K. So again, 10K, 60, 75, 90, 10Q, 40, 40, 45. Okay, let's go to the next question. All right, here we are at question 5. Which of the following events requires an 8K form to be filed and also states the correct amount of time the company has to submit the form? Okay, we've talked a little bit about the 8K, but we have not talked about the business day requirements. The business day requirements is something that you may need to know, but the most important thing you need to know about the 8K is what would require an 8K, like what event would require an 8K. So read through these, think about which ones. We've talked about an 8K before. We've talked about how 8Ks cover things that are material, that are going to affect the company and people need to know. So read through these different options. We're at question 5 here, so I think you should be able to pause the video, read through these different options, and when you're ready, come back, we'll look at the answer together. All right, here we are at the answer. The answer is A, on February 10th, a public company's CFO resigns. The company has 4 business days to submit the form. So that is something that requires an 8K, and that's the correct time frame that they have to submit it. So let's walk through this. Again, the 4 business days is a little bit less important, but it's really important to know what requires an 8K. An 8K form is typically required when a company experiences significant events, such as the resignation or appointment of key executives, such as a CEO or a CFO, the completion of mergers or acquisitions, entry into or termination of a material definitive agreement, bankruptcy or receivership filings, changes in the company's auditors, financial restatements due to errors, or significant legal settlements. So anything that's just like a really big deal, these events are material and may affect shareholders or the company's financial condition. So remember, this is the most important thing you need to remember with the 8K. Anything that is material and that is a significant event is going to be recorded or reported in an 8K. Now, let's talk a little bit about the business days as well. The correct answer is A, the CFO resignation. That one is material. It's going to be a big deal. And they have to submit it within 4 business days. And that's why this one is correct, because even though B and C are also significant events that would require an 8K, they were saying 10 business days, which is not the correct answer. And then the final incorrect answer, D, an annual shareholder meeting generally does not require an 8K filing unless there is a material event that was discussed there, which, maybe there was, but it didn't mention that in this question. So, and also the claim that the company has 4 business days to file the form is misleading in this case, as no 8K is required. So they didn't have 4 business days to file anything because they didn't have to file anything. But the 2 things you need to remember from this question is, first off, 8Ks are required for significant events that are going to be material to the company and to the shareholders. And then something you may need to know, just in case, 8Ks typically have to be filed within 4 business days of the event occurring. So they have to be filed pretty quickly. So they are filed as things happen. Instead of with the 10Q and the 10K, those are just filed on specific dates each year. And large accelerated filer, none of that really matters for an 8K specifically. And with that, we've learned a lot in just 5 questions. Before we go any further, let's do one more part of the SuperFast CPA process called Pillar Topics. Now, the idea behind Pillar Topics is, as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 questions trying to teach you the filing deadlines for a 10K or a 10Q or different things like that. You've seen things multiple times, and these are the things that are sticking out to you and are obviously important, so you write them down as pillar topics so that you can keep them and know them for later. So with that, let's go to the pillar topics for this video. Alright, here we are at the pillar topics. First off, for the 10Q, remember that large accelerated and accelerated filers have 40 days to file the 10Q at the end of each quarter. Non-accelerated filers have 45 days, and so just remember, when it comes to a 10Q, the deadlines are 40, 40, 45. 40 for the large accelerated, 40 for the accelerated, and 45 for the non-accelerated. And what is the point of the 10Q? It's pretty easy to remember. Essentially, it's just an unaudited quarterly financial report, or it has quarterly financial information and other business information. So pretty easy to remember what the 10Q does, but these are the filing deadlines. And then for the 10K, large accelerated filers have 60 days, accelerated filers have 75 days, and non-accelerated filers have 90 days. All of that is from the end of the fiscal year. So with 10Ks, remember 60, 75, 90. And the whole purpose of the 10K, again, it's pretty easy to remember. This is basically just the large, audited, full annual report covering business and financial position of the company. It's more detailed than the 10Q. It's basically just all the information for the company for the year so that people can see that. But again, remember 60, 75, 90 for the deadlines for the 10K. Form 8K, this is a little bit less important. You might not see this very frequently, but you might. They have 4 business days after a significant event occurs. But the most important thing you need to remember for the 8K is that it notifies investors of material events, including CEO resignations, mergers, acquisitions, and other key events. Basically, the big stuff that happened throughout the year that's going to affect people, you're probably going to have to file an 8K for that. And then finally, again, this is something that you might not see too much, but I felt like it was important to understand the idea behind these different filers so that you can remember them, so that you can remember the filing deadlines. Large accelerated filers are companies with a public float of 700 million or more. Accelerated filers have a public float between 75 million and 700 million, and non-accelerated filers have a public float of less than 75 million or they are filers that are not subject to SEC requirements, and that would include companies with less than $100 million in annual revenue. Just remember, one more thing, if a company has less than $100 million in annual revenue, they cannot be considered a large accelerated or an accelerated filer. Now again, this is a little bit less important than this information up here, but again, I felt it was important to know what a large accelerated filer even is so that you can remember what the filing deadlines are. And with all that, we've gone over the pillar topics for this video, and that is the end of the video. Thank you for watching. Before you go, make sure you check out our free 1-hour webinar training on SuperfastCPA.com. Again, it's only 1 hour, it is free, and we will show you and teach you the key ingredients to passing the CPA exam, things such as studying in the morning, things like going to the questions first, things like studying in mini sessions throughout the rest of the day, and things like that. We're going to show you how to pass the CPA exam without wasting time or energy. Also, remember that we only went over 5 questions in this video, whereas Superfast CPA members will have access to the full 10-question video when we post it in the members forum. So if you liked this, just remember that you can get more of it by becoming a Superfast CPA member. And finally, if you did like the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.